On your bullish dollar view, based on the theory we're headed towards the U.S. recession, shouldn't we expect some downside pressure on the dollar, assuming the Fed pulls back on their 2016 economic projections?
That is your theory. That is wrong, my friend, and Jedis alike. Don't forget that you can go back to the last recession and just review what you thought should happen versus what actually happened. Last time the U.S. went into a recession, gold went down, the dollar went up. Okay? People raise cash. People go to dollars. The rest of the world tries to devalue. The Federal Reserve, again, until determined otherwise, I know a lot of people don't want it to be this way, but the US dollar is the world's reserve currency. A lot of people lost a lot of money understanding that what they thought it should be, which is not be the world's reserve currency, and things like Bitcoin and gold and everything else should be, isn't yet. So the timing matters. Again, during a recession, when people have to go to cash, they typically go to treasuries and US dollars. These are baseline behaviors that have always happened. So again, watch out for that. In particular, when the Europeans and the Chinese are devaluing every single day, or trying to. So again, the currency war, I'm going to go through it tomorrow on our quarterly global macro themes call. It's the third theme. We're going to review the currency war in total. And I assure you, I will let you know when I'm not bullish on the dollar every day. I have multiple touch points where you can maybe not touch me, thank God, but the reality is that you can see me, you can hear me, you can read what I'm saying, and you'll know when we're off that horse, and there's absolutely no reason to get off that horse today. If you're long the US dollar today, congratulations.